All right, people, welcome everyone. Welcome to the live crypto. Yep, that's it. Welcome in, guys. Welcome to the live weekly breakdown here. So let's go through this week's charts. All right, now the market today has been very volatile. So if you're wondering why I haven't done the weekly update, as I usually do, with the market today, what we've had is a very volatile day. The price has been moving very, not strangely, I'll say, but very differently from what it normally does. Okay, and that's a good thing as well. You know, we're switching over into Q4 in a few days. By Friday, we will be in the fourth quarter of the year. So there is a lot going on. And I think at this phase of time that we're in, it'll be very important to, you know, get into exactly what's going on here. So with the weekly breakdown, I think what I'm going to do in this respect is to give you guys the pairs that I think are most likely going to do something instead. So I'm going to go over first with USD Japanese Yen, all right, which has had an amazing bullish run so far. And we've been discussing in quite a lot of detail. Now, first thing here is that I'm watching on the weekly is the weekly structure, but I'll start back from the monthly just to give you an idea of what's going on. So USD Japanese Yen, welcome for all of you guys coming in. Let's have a look at what's going on. So USD Japanese Yen right here, we have, okay, from this point, the price has been operating in this range right here. We have a monthly demand zone right here that the price has been using as supply currently. So throughout the years of 2019 into now, if you notice, the price has broken beneath demand first. So we had a bullish leg of price up to here. Then price broke beneath very strongly in the first month of 2019, January. We had a return in the several months, you know, to follow, and then another short. And then we saw 2020 during the coronavirus period, we had a spike above the zone, okay, but not a body close. So this area of flip demand, or in other words, the supply zone was still in play. But then we see that the price returned to this area once in February, once in March, and then we had a short leg down. Now, what are we doing right now? Well, since the beginning of the year, January, we had the first 3 months of very strong bullish activity on the dollar, okay, which is to be expected with all of the monetary policy protocols put into place. Then we see that the price has really slowed down. So once we had a return near to supply, not within supply, the price started to slow down quite a bit. So we have April, May, and then June. Now, when we get to June, we see the prices return into this area for the first time. And the resultant thing is that in July, we saw the price take a dip down for a short, okay? So after we had this dip down for the short here, the prices return back to the same point again. So now the question is does the price want to use this area again to continue with another short? Now, if I drew the market structure for you, I mean, just using the A to B swing. Now, the A swing would be here, all right? The B swing will actually be down here. This is not the swing low that is from June 2021 is not the lowest swing that we've seen so far most recently. The swing is actually from A to B in this manner. And so at the moment, the highest point of 2021 represents a C structure. And therefore, based on these two things, the price should be on its way down short. But for me, one of the things that I'm seeing on USD Japanese Yen is that since this demand zone was created here, which is from the month of April, the price hasn't really been able to drop beneath it too well. Now, it doesn't look that great on the monthly time frame, but we do see that the price is strongly pushing towards the bullish side and is supporting bullish activity. And so to me, when I look at what we have with USD Japanese Yen, although the market structure is suggesting a short and the bias is short, I mean, if I quickly just zoomed out for a moment here, in terms of the most recent swings here, we have our A to B swing down here. Here is C and here is D. Here is the new A, here is the new B. And we have a wick closure, not a body closure, above this high right here. So therefore, we're still in play for bearish activity in terms of the major direction of the trend. So let me zoom back in here, monthly, zoom in. So knowing this, I know a short has to come along, but there's very strong signs that the price may actually push very strongly bullish. Okay. So bringing this down, I'm going to keep this price action chart here. I'm going to go down to the H4 or D1, either one. And let's just have a look and observe what's going on. So USD Japanese Yen has basically been going in one direction for at least 5 days now and has returned back into this area of supply. So this area of supply can be a marker that we can use to suggest what the price is most likely going to do. Now, from where it is here, this area of supply, we've just kind of touched back, not really re-entered, but we've kind of touched back into where the supply should go. And this may trigger a short, okay? The other side of the story is, and this is why I would say keep your eyes on this. Now, today the market has been very volatile, if you've noticed again. If you've been in the markets today, now Mondays are usually a funny day anyway. But on top of that, we actually have a situation where Monday, today has been very weird in some of the things that the price has been doing. Okay. And it's because of the effect of what we see with Evergrande and other market effects that is playing into, the market for today. But nonetheless, USD Japanese Yen has pushed towards this supply zone. So I do expect some selling, but how far the selling will go will depend really on what we see in the next couple of days. So if you want to trade USD Japanese Yen and you're a USD Japanese Yen trader, I would suggest waiting for a body close above this supply zone. If the body of the candle, of any daily candle, closes above this supply zone, then I do expect the price to go into a phase of continuation and start to go for the highs that we've seen back over here and the high of 2020, okay, which is at 112. All right, but it really does depend on what the price does, moving forward. At the moment, we've had a bit of a bullish leg today. Prices still in this kind of bullish leg, but I'm expecting to see a short appear probably soon because we've entered into this area of supply for the first time since, it will be the first time since the 5th of July that we've come back to this area of supply. So I do expect there to be I was going to use the word supply shock, but that wouldn't be the proper economical term, but I expect the price to react to, what we have going on. Now, from the H4 structure, the price has really taken off from a very interesting place. Now, if you look to the left here, to work out where the price is drawing liquidity from to go for a short, it's not from here, okay? And neither is it from down here either. In fact, what we've had is, as I can see here, we've had one of the markets where there's a strong direction strong bias over the weekend that's carried over into the next day. So the order strength coming in from the bullish activity we saw for basically the entire week on USD Japanese Yen has continued into next week, but we haven't had completely efficient movement. The price didn't return to demand here before it took off. So in reality, the price will pull back down at some point. And so we can, in essence, grab some opportunity here. So I do know a short will come along soon. All right. Today, the price has done about 50 pips. As soon as the price gets in this area of grading, I do expect to see the price start coming down and returning the other way. How far it will go, though, would be a question. But if it was to go on the short side, the best bets is definitely the price to come for these lows here, because this has created a retail trading level, which I'm sure the market would want to go for. This is at 109, 109. I think that's easy to remember. A short target here would be 109, 109. And we could go for a very beautiful short, providing the price gives us what we want. And that's about 200 pips of a drop. So keep that on your radar, guys. Now, the next pair that I really want to look into here, all right, is USD Canadian dollar. Okay, now USD Cad is clearly not behaving the same way as other US dollar pairs. Okay, it doesn't follow normal US pair correlation. And that's simply because of the relationship that Canada and the US have, and the fact that Canada is a commodity currency, as we've been through many times over. So for me, when I look at the price here of USD CAD, it's in a very interesting place. I mean, from the weekly, if I go right here, this weekly zone has really been the crux of the story of USD CAD for the entire year. Okay, this is the last weekly. Now, this supply zone is the last weekly supply zone, okay, on the from 2020's price action when we had this very strong short for basically most of the year. When the price entered into this area, we saw for the first 3 months, until we got, or the first 5 months, in fact, into the 6th month, when we got to June, until the price reversed, the supply zone was supporting, bearish activity on the short side. From this point of reversing here, we've seen from June, so the second half of the year, up to where we are in September, the price reversed all the way back up into the same area. Now, this is good for us because we can use this area as a good marker as to what to do. Now, either the price has performed, and I'm going to mark this off here if you want to use some swing. So if I start from here, A, okay, and then over here, we're moving into what we have at B right here. Okay, and then from this point here, we have a C swing. So we have an A to B, B to C, and C to D swing. All right. Now, these movements that we see occurring, for the price action that we're looking for, would denote that the price is going to continue going in a bearish direction. And when we look at what we've seen since March into April 2020 till now, the price really has been going one way. So it would make sense for the price to continue in another bearish movement and that. But this weekly supply zone is so powerful because we can use it in many ways. Now, the other way we can use this is to determine if the bullish pressure has increased on this pair. Now, the bad news is that we have to wait one whole trading week, so 5 days. In essence, let's just call it 7 days for us to know this. Why? Because as you can see, we've had many attempts of the price to close above this supply zone, but they've all been wicks and not bodies. So unless the body of a weekly candle, which means we need a strong bullish run this week, closes above here, then we couldn't suggest USD Cad to move into a bullish direction. From what we see here, the structure is denoting to another sell-off. But in order for us to know that completely, we would have to wait a whole week. Now, of course, on lower timeframes, you can make better assumptions as to what most likely the price will do. But from just looking at the weekly structure here, this is a great opportunity because whether the price goes very strongly short or it produces a break above here, we're going to see very good long activity for a while. Okay, either way. Now, you have to make the decision to know what you're doing. But from when I look at the price action here, I do see how we could have very good price action here up to about 1.33 at first, even one back to 1.35, or the price will continue. And looking at the structure that we have here, again, on the downside, USD Cad, to me, there's two scenarios that are important on this market structure. If I start with the downside, what we had here, the price came for the low of this month here of 2017. But then what we have here is a massive supply zone, which has existed since 2019, and there's been a cap on the price until what we saw in 2014. And literally December 2014 was the end really of this cap. As soon as we hit January 2015, the price had an absolutely crazy bullish spike out of this area. That week, in fact, if I just grab it here, that month, I should say, we had 1,238 pips, which is absolutely crazy. Okay. Now, when the price broke up above this area, we never had a return. We had a few attempts here, but we've never had a return back down to this area for there to be any reoptimization of supply for demand since the price has broken past supply. Now, why is this significant? Because this supply zone held the price for 5 years, which is a very strong area of supply. So on a break, the price should return on the other side and then continue going. And so we haven't had that continue going movement or the return just yet, which is why I'm more inclined to look for a sell than for a buy on USD Cad, personally for me. Now, along with this, I mean, I do believe oil prices are going to rise on USD Cad. And I do think as time goes on and more things open, as COVID inevitably will be dealt with, okay, the demand for oil is going to increase, and that will give the Canadian dollar a very good boost, okay, in terms of their strength of their currency. So even though I know that there is cause for there to be a long, but I'm still more towards the bearish side. I know we've had a reaction here because the price took this low here, but in terms of the monthly market structure, I do think that we have an opportunity for the market to play into that monthly kind of game plan. On the other side, the upside movement, which I believe is also inevitable, comes from this point right here. So the market created a double top in the middle of nowhere, all right, on the way down, okay? And this double top, of course, from a retail trader side, you would want to sell. But if I just draw supply across here, none of these spikes or none of these highs return back into principal supply. So in essence, this short that we're seeing here, although of course we're on the monthly, so this is still a lot of money, I do think that the price needs to refuel to move a bit higher into some deeper areas of supply before we have a massive short. Because if you look at the market structure starting back from 2001, we have a clear bearish market structure and bearish bias on USD Cad. If we start from the top, here is the A swing. All right, down here in 2007 is the B. Now we have two highs are very close to equal, but this high is slightly higher. So this is our C point. And so from here, we should be looking for a short, but there isn't any, I mean, in essence, there is supply here. You could say so, but the body of this candle closed above the supply zone. So I still think that there is a very strong bearish piece of action to happen. And then coupled with that, a very strong piece of bullish action to happen. And I'm talking over the period of years, unless there's some sort of major market thing that happens. This is really where my mind is at when in terms of USD CAD. So I would say primarily keep your eyes focused. I wouldn't want to give you a bias. For me, I'm keeping my eyes open. Let's have a look at USD CAD on lower time frames to see what we have going on. So if I go from the H4 here, so how has the week started? Well, last week we have the low here. We've had a H4 close beneath the low quite strongly, which suggests to me the price would like to make its way further down. Now, you know, to what to look for, I mean, when we had this massive spike here, it did form a reversal signature that you can't ignore right here from this massive spike we saw in the price. Now, not only did the price go for this high, it also went for a high that was quite far back, all right, which was also an area where the market would have gone for in terms of market order book, you know, filling and things of that sort. Now, even though the price is bullish from the structural point of view, this spike right here gives me insight into what the price is, to me, trying to do. On the daily structure here, we have a bull trap, which has formed a supply area that the price is operating within right now. So as much as I want to go for a buy, I really do see how the price could also sell. Now, on the H4, the price looks like it has interest in making its way short and not stopping. So I genuinely would say with USD CAD, guys, at this current time, I would say to be an observer in this market rather than an active participant. Now, there are scalps you can capture if you really want to, but we want to get those major moves because you can see when USD CAD moves, like for example here in this week, starting from the 16th here, we had a massive 400 well, it's not even a week. Well, it is a week actually. We had a massive 442 pip move. Okay, in 1 week. The price literally, if you had just put a buy from the beginning of the week to the end, you would have made serious money. Okay, so USD CAD does have those moments where it really does move, and you want to be prepared for those. Okay, and equally, when it's reversing, you can see here bull trap and then very strong short the other way. So in essence, if you caught this correctly and just followed what was going on, you could have made 347 pips plus another 420 roughly. So we made it on the way back up. We missed our pending, but there was some good trades on the way down too. But again, this is how you want to approach the market. And I'll say USD CAD is a good one, but it does need more time. Okay. So the other mover that I've been looking at, which my eyes are still on, is Swiss franc Japanese yen. So let me explain this to you. So as you notice with Swiss franc Japanese yen, there's been a massive rebound seemingly out of nowhere where the price has come back even past where we were originally. So let's recap on what we have with Swiss franc Japanese yen. I still haven't changed my mind on it since even though I haven't spoken about it, I just wanted to leave the market to give us more room. But if you've been following here on the monthly, this monthly demand zone is responsible for the major bullish side of the Swiss franc crash, okay? And then we see the price dropping beneath, but price holding within this demand zone area. So in the year of 2015, We saw the price use this for the first half of the year to push for some bullish activity. Towards August and then into September, we had a return, a bit of a push up, but then price continued to break down. So right here, by November, we had a body close beneath the zone, which means that this demand zone is no longer being used for demand and possibly can be used for supply. Now, from this point, it's taken 7 years from the inception of this demand zone, which is from the last month of 2014 all the way until where we are right now. Hence why this is an opportunity, and I'm not changing my mind on this, for us to have a major short, because now the price has returned to historic order block, but on the other side for bearish activity for a sell, okay, which I believe we're about to have a major sell anyway. All right, now on the weekly time frame here, okay, initially, and I'll go to the daily structure here to help as well. Here we had a very strong piece of action here, and I would like to rehash over it. So if I start from the low of May all the way up until where the price reversed, it took 35 days. So it took 35 days to create this bullish movement was seen of, let's just call it 328 pips. Now, after the reversal signature happened here, we see in 3 days, the market filled out almost the whole entire 35-day movement, which lets you know how strong the bearish pressure within this order block is. Now, the supply zone that was the initiator for it is here. So this is where we're watching for in terms of a trade for a short. Now, we were looking for the long. Now, the price initially was acting very strongly, bullish for a while, but we saw the price push down very strongly. Now, notice what the price has done. We've had all bearish candles and then all bullish candles. So this movement here, all right, is institutional sponsorship. We've had institutional manipulation of the price beneath the low, because every candle here is red, which means that the liquidity pushing the price short comes from a very strong, if you want to call it a whale in the market. And this reversal also comes from a whale because we have all bullish candles. So something went on here in terms of market manipulation, all right, which pushed the price lower. Maybe the anticipation for the buy was too high. Too many traders were in the right direction for a bullish run before a bearish one. Who knows? But one thing I can see from here is that the market has made a very strong manipulative move here. Now, if this is the case, I'm looking for the continuation long. Now, there is opportunity to the left of us where we could look for a long. But I would say, guys, with what the market has done, the better trade is the short. Because if the price returns to the supply zone that it gave us this break of market structure, this sell that we're about to have is going to be historic. My first target literally is right here at 113. So we're looking at about 900 pips. I'm looking to get a very, or not 900, 850 pips. So for me, I'm looking for a very good entry for a short. I mean, to be fair, with my funded account, depending on what level I am, I definitely would like to get one lot on here. And even with my own personal account, at least the 0.50 lot size would do. Even a one lot on there too would be great. And I'm willing to just ride this wave all the way down, because I believe that this is going to be a very strong movement that happens in the very near future. And from the sense that I'm having from the market, I do feel as though we are getting closer to things that are going to be very crazy. I think the market is going to look quite different by the end of the year. I do think a lot of movement is about to happen. And, with all of the different issues that are going on in the market, I do think we are getting to that point. So just to end off with this analysis here, I want to switch over to the other brokerage account that I'm using, Hugo's Way, and just kind of discuss what we've got going on with the dollar index. More and more as the market has been behaving in very interesting ways, I think it's wise to look at the dollar index, okay? It's not where I base all my complete analysis from, but remember, guys, confluence, which is evidence supporting your trade argument for a buy or a sell, or your trade thesis, breeds confidence. So the more factors you have, and this is not about analysis paralysis where you have a million indicators on your chart all telling you different things. That's slightly different. But rather what you want is to build up fundamental, evidence, technical evidence, which support or don't support your argument of why you should take a trade. Okay, because at the end of the day, as I always tell the academy students, if you can't explain the trade, don't take it for yourself. If you can't repeat that trade, because remember, wealth is being able to use a skill that you have to produce money at any time, with the right conditions required for that skill, So, for example, you're trading, you need a laptop and an internet connection. All right. But with that skill, you should be able to produce money at any time. So if you have a trade that you can't explain, okay, don't trade that. Don't take that trade. All right. I'd rather take a trade that I can explain to others, because if you can't explain it, then you can't measure it to work out why you went wrong or why you went right. Okay. So you can't grow from it. Okay. So this is why, for me, again, I told you that signals is not my style, because I love to give signals for wealth, but the way I do is completely different. There's teaching involved with it so that you understand how to replicate this for yourself. And so even though I never looked at the dollar index as much, in short, I've started to do a lot more of it. So with the dollar index, I do believe that we are going for a long in the short to midterm. All right. Again, if you looked at what we saw with USD CHF versus the dollar, they are very similar. They have the same reversal signature, same break of market structure. Okay. And we've had even a return here, and USD CHF has made this way long. Now, again, I'm still contemplating there's a short coming along soon for me, because on the weekly here, again, we have another one of these supply zones that were holding the price for quite a few weeks until we had the break here on the week starting 6th of June. I would like to see the return back here, but currently we're in a range where the price could do quite a few things. Now, the price does not have to come back here. Now, technically speaking, it should go back here, but hear me out, it doesn't necessarily mean it has to go back there. Okay, so if I go right here to where we are, this is the range that we're operating in, between 94 to around about 90, 89 in that region here. Now, if the price does come back here and fill out this movement here to complete their cycle, then we should be looking for a very strong bullish movement here. Now, once the price, okay, which I do believe is going to happen, breaks past this supply cap that's been here since 2020 from September, then I do believe we're going to have an absolutely crazy rally on the dollar. Now, it's funny enough, coincidentally, where the Federal Reserve have decided that they want to start a tapering, okay? From not wanting to do a tapering to starting to do a tapering lets you know that, there are things going on that you need to be highly aware of. And if the dollar does have a taper, it will give a very good amount of strength to the dollar and cause, some bullish activity to happen across all US dollar base pairs and, of course, the dollar index itself. Okay. Now, of course, the tapering has to be in line with, other monetary policy, but I can see from here that we are looking at something of a taper to happen soon. All right. We just need the right, when we have that go ahead, we can have it. Now, the other thing I would say when I'm looking at the price here, or the other scenario, is we may not get a return here. There is a demand zone holding the price, and the dollar index could just completely just break past here. But the week that I see, when we have a weekly close above this area, I would say to you, when we have a close at 94,646, be ready for a very strong bullish dollar. And I expect, from this strong bullish activity that we should see, the price to really go on to get back to about $100. Now, if you're not too sure what the dollar index is or what it does, in simple terms, the dollar index is an index which measures the strength of the dollar compared to a basket of 5 other currencies. We have the largest being the euro, about 57%. And then we have the pound, we have a basket of 6 in fact. Okay, the Swedish krona, okay, the Swiss franc, the Japanese yen, and we said the pound. So those are the group that there is. So in essence, when the dollar index is increasing in value or going upwards, it means that the dollar is also increasing in value too. Okay, and when this is going down, then the dollar is weakening. So you can use this as a map. And as I said, it looks very similar to USD CHF. So keep this on your mind, guys, and for what the market is going to do. I believe we're about to have an explosive Q4. All right. I hope you take this analysis and use it for good and get some good analysis and projections out of it. So I hope you guys enjoyed that. If you want to know a bit more and you're not too sure about analysis and you want to have somewhere to start for free, there's a link in the description below called the Mastermind course. It's our free 4-part course that you can watch with me teaching you, very short and sweet and to the point, of different factors of how you can learn how to analyze and be able to start to go in line with us as we go on these lives and start to understand what the market is trying to do. Okay. So I hope you guys enjoyed that. Make sure you put a thumbs up and subscribe as well. Share with your friends as we're growing channel, going to 1 million. And I'll catch you